Hello, ladies and gentlemen. I don't think I need to introduce the RBI Governor to you. All of you know him, so we can get started straight away. Mr. Das, thank you very much for finding the time today. You need to take this video. Yeah. The way the last 1 year has been, just want to start by asking you, when you brush your teeth in the morning, do you see a few more extra gray hairs on your head?
No, I attained wisdom, I think, fairly early in life. And I've been having this gray hair for quite a long time. So, how many more has been added? I think probably my friends from Mumbai will be able to tell. But otherwise, it's always been like that.
Has it been the most challenging year of your tenure, or would you say the COVID year 2020 was more challenging?
No, every challenge in a particular context becomes, it looks more challenging than the previous one. I mean, there were so many situations when I was a part of the government when we dealt with a lot of a lot of challenges. When I came to RBI in December 2018, the entire 2019, the primary focus, not just one of the areas where we concentrated from RBI, but the primary focus in the financial sector was on the NBFC segment. Post ILNFS, liquidity had dried up. There was a considerable undermining of market confidence in the NBFC sector. So in that context, we had to really focus and see that the NBFC sector makes a comeback. So we very intensively focused on the liquidity situation in NBFCs, the bad asset situation in NBFCs, and I think by the end of 2019, we were almost coming to an end of that problem. Right. Then, of course, the war came then, of course, the COVID came in 2020. 21 was Delta wave, and 22 was the war. So it's been one challenge after the other.
Exciting times for you. But, you know, there's been a lot of talk of late of monetary policy failure, the letter that you've written to the government, which none of us have seen. But I want to ask you if you think, on hindsight, you could have done anything differently. It's a hypothetical question. Hindsight is always 2020. But do you think you could have done anything differently or would have done anything differently in the last 1 year?
I think we have been on the right path. Okay. That is our assessment. I mean, people can hold different opinions. I'll tell you why. You see, the inflation, even during 2020 later part, around October of 2020, inflation had gone up. It had touched 6%. And there was market expectation in some segments of the market that RBI will probably increase the rate. There were people who were saying that RBI should now turn the focus to inflation and increase the rate. But our assessment showed that going into January or so of 2021, the inflation will come down. And indeed, it came down. Then 2021, again, in the latter part of 2021, the inflation was gradually going up. In the February MPC, which was very critical, the inflation projection which we had for that for the next financial year, that is from 2021-22, for that financial year, our assessment of the average inflation was that it was going to be 4.5%. The professional forecasters in the market, their forecast ranged between 4.6 to about 5.2%. Whatever it is, inflation was going to be around, in the worst situation, around 5%. We had done our scenario analysis assuming crude at even higher prices at $95 per barrel, $100 per barrel. And we found that the inflation in the worst situation would be around 5%. Now, growth was recovering. We wanted a safe landing of the economy during the year 21-22. So in February, contrary to what somebody may say that RBI probably should have increased towards the end of around, let's say, December 21 or February 22. Somebody may say that, but the point is we wanted the economy to have a safe landing, the recovery of the economy, the GDP to be above the pre-pandemic levels, and 21-22 growth was about 1.6% above the pre-pandemic levels of 1920. I'm giving a long answer, but
No,
I
no,
think
it's a
it
very
is
interesting
necessary.
answer. Please go ahead.
It is necessary. So economy was recovering. We wanted a safe landing for the economy in terms of the growth figures. And I think today, looking back, it gives us great satisfaction that last year the economy recorded, last year meaning 21-22, it was 8.7%. And for the current year, our projection, current year meaning, current year, 22-23, our projection in RBI is 6.8%. The National Statistical Office has projected 7%. We will know after March. So the economy has not only landed safely, the economy has remained resilient, notwithstanding this huge amount of global spillovers which are emanating because of the effect of the war, geopolitics, and the synchronized monetary policy tightening, especially by the US Fed and other advanced economies. Inflation, yes, it did go up to 7% after reaching a peak of 7.8% in April, April 22. It has come down. In between, it went up once for 7.4 or so. Now, December figure were released yesterday. It was 5.7. It has come down from 5.8 to 5.7. It's mainly due to softening of food inflation. I do concede that point. But so therefore, looking at this, now the law mandates that RBI is supposed to, the RBI Act, the law mandates that RBI has to maintain price stability, basically meaning that maintain the inflation around 4%, keeping in mind the objective of growth. And I think we have kept the objective of growth, which had to be given primacy during pandemic times and thereafter. We have not lost sight of the need to focus on inflation. So therefore, when the war started and, the international prices of commodities, even the food prices went up, prices of edible oil, prices of cereals also went up because of the war in Ukraine. So we did not hesitate to take a decision in an off-cycle meeting last year in May. We were criticized for that. But it was necessary because we didn't want to give a big shock in our June monetary policy. So we split it. We did 40 basis point increase in May and another, we did another 50 basis point increase. So even looking back, I think we have been on the right course. And I think, the earlier theorists of being behind the curve, etc. I think that discussion on being behind the curve is, I think, is over.
Okay, that's a long answer. Have you just
very long answer,
No,
but but it has to be. It had to be explained.
in this long answer, have you just paraphrased your letter to the government?
I have said it earlier. It's an it's an intelligent guess which everybody can make, and I'm sure anybody else can make in this room. But broadly, yes, I think, in a way, yeah, in a way, manner of speaking, broadly, yes.
Broadly, yes. You spoke about this inflation targeting band. Would you go as far as to say, given the way inflation is moving and the kind of volatility in prices we are seeing globally, that whole notion of that target band needs to be revisited today?
I would not think so at this point of time. The inflation targeting framework did facilitate maintenance of average CPI inflation at about 3.9% from 2016 when it was instituted, when it started, to the pre-pandemic position in February 2020. So for those 3 years, almost 3 years, the average inflation was 3.9%, close to 4%. After the pandemic, of course, the situation changed. Now, we have had, one after the other major shocks, the COVID, then the war, and monetary policy tightening, the current volatility in the financial markets, etc. But I think it's too early to shift the goalpost. The 4% has a certain meaning. And also, let me add that our target of 4% plus minus 2% to declare it as a failure, if you exceed that, then only it's a failure. I think that gives us sufficient flexibility in our monetary policy decision making. We utilize this flexibility, the Monetary Policy Committee, the MPC, utilize this flexibility embedded in the inflation targeting framework to tolerate higher inflation of 5%, 5.5%, and even more than 5.5%, up to 6%, because the requirement of that time when we were undergoing the stress of COVID and
Yeah, a big round of applause, please.